Okay, I won't labour too much on our disclaimers and forward-looking statements. They're all available from the presentation off the website. What I will do is give you an introduction to who Hartshead Resources are. As well pointed out, the UK is in the middle of not just a gas crisis, but an energy crisis that's throughout Europe. Hartshead Resources are developing gas fields in the Southern Gas Basin in the North Sea to provide gas into the UK energy system. We own a single licence, 100%, that's licence P2607 in the Southern North Sea. It contains 5 contiguous offshore blocks, and within those blocks we have multiple opportunities for fields to be redeveloped and exploration opportunities. Our phase 1 is 2 fields, both have historic production from single wells. Those single wells have produced roughly in aggregate 60 BCF of gas, and we have about 600 BCF of gas in place. So our phase 1 represents 2P reserves of about 300 BCF of gas to be recovered. Our phase 2 follows on from phase 1. It's also 2 fields to be redeveloped, also with historic production. That's another 140 BCF of gas to be recovered. And then we have an exploration portfolio of about 340 BCF of gas. So if you count our reserves, contingent resources and prospective resources in aggregate, we have nearly 800 BCF of gas of resources to be recovered, which is a significant resource base when you're starting to look at the energy requirement in the UK going forwards. And particularly in the UK, we are very dependent on imports. We need more indigenous gas, and Hartshead hope to play our part in providing that. We received the licence P2607 at the beginning of 2021. We have spent the last 18 months assembling a very high-quality project delivery team. I'll go on to talk a little bit about the project and what we've achieved, but we have a very experienced development manager who's delivered over a dozen small gas field developments in the Southern Gas Basin. We have a commercial manager who's negotiated gas transportation and off-taking agreements in the Southern Gas Basin. The last one he did was with Shell. We have a subsurface manager who has executed very similar developments to ours in the Southern Gas Basin. So we have a team of people in the UK that have been there, seen this, and done it before. And that's very important in terms of delivering, particularly our phase 1 development plan. You can see there that we have an incredible resource base, but you can also see that we are a critical part not just of the UK's energy security strategy, but also the energy transition. Our gas will be going into the Bacton reception and processing terminal in the UK, and the UK government have spent the last 2 years looking at that area becoming the Bacton Energy Hub, a centre for offshore wind, blue hydrogen, green hydrogen, and offshore CCS. And we see potentially our gas being delivered into Bacton as being a very important part of the energy transition and potentially fuel stock to blue hydrogen. So a great resource base, a great team, a great position to be in an incredible market. So we think right place, right time. There we go. And talking about the gas market, I think you all probably know what's going on in the UK now. I arrived in Sydney on Saturday evening. I turned on the TV and there are articles on the Australian news about UK gas prices. It's pretty phenomenal. Even before the terrible events in Ukraine, we saw gas prices start to spike, and you can see some of the gas price spikes on that graph. This is really to do with stability of supply to gas to Europe, very, very dependent on imports, not just Russia, but LNG, Qatari gas, gas from Norway. The issues with getting hold of those exports and the vulnerability of the energy system has really started to push prices up before the invasion of Ukraine. Obviously, the invasion of Ukraine has had a terrible effect on the gas markets, but this is going to be a structural shift in energy pricing in Europe, because countries in Europe now have to start looking at having sovereign control over their energy security and not offshoring that to Russia or Qatar or America or anyone else. And we need to build our own internal energy systems in the UK and in Europe that can provide us with the energy we need. And that will inevitably probably mean more expensive energy. but we need to make those investments. We see a structural change in gas prices, and I've got to be honest, I don't want to see £5 a therm long term. I think £1 a therm is where we'll probably end up. If you think about our phase 1 project, 300 BCF of gas is 3 billion therms, roughly. So at £1 a therm, the revenue from our phase 1 will be about £3 billion. So incredibly valuable project in a very interesting gas market. Sorry, button's not working. I'm pressing it and nothing's happening. It is this one, isn't it? Oh, there we go. Why don't you just stay here, and it obviously makes it work. Yeah, I know, right? So this is our license footprint. You can see where our phase 1 is. It's the 2 red blobs, the Anning and Sommerville gas fields. As I said, both of those fields have had historic production. So we have very little subsurface uncertainty. Between the 2 fields, there are 7 well penetrations. 4 of those wells have over 200 foot of core through the reservoir. We understand the reservoir very well. They both have good 3D seismic data coverage, so we understand the size of the accumulations very well. And they both have historic production and well tests. So we can build high confidence static and dynamic models, we can history match those models, and then we can really work out how we're going to develop these fields. One of the questions I often get is, why haven't these fields been developed before? Well, they were owned by a super major. In terms of materiality of resources, probably not that significant, and they are slightly lower permeability than the easier fields around us. But we are going into these fields deploying horizontal extended reach multi-frac wells. We have an analog field next door to us called Clipper South, where that has been deployed successfully, and our subsurface manager was the lead development manager of Clipper South. So we're taking proven technology deployed in the basin with identical reservoirs to produce from our phase 1 area. You can see phase 2 further up to the north. That's 140 BCF again. 2 fields that have multiple well penetrations, 3D seismic data coverage, well tests, and well logs. And we understand these fields. We need to do a little bit more subsurface work on these fields. They'll go into field development planning later this year. And then a really interesting portfolio of exploration opportunities. And one thing that's really worth focusing on is when we put our phase 1 infrastructure in place, a lot of these exploration opportunities become infrastructure-led exploration. These can be drilled, tied back, and monetized very, very quickly. We have 4 prospects near our phase 1. In aggregate, they represent an additional 200 BCF of gas. 2 can be drilled from our phase 1 platforms. The other 2 can be tied back subsea. So we can bring these on as part of our phase 1 development very, very rapidly. So potentially our phase 1 could transform quite quickly into half a TCF of gas in a success case with these 4 exploration prospects. You might have to come and stand over here again. Oh, there we go. So what have we done with the assets that we got? And we were awarded these through the 32nd licensing round in the UK. We received the license award provisionally in September of 2020 and got the final paperwork in January of 2021. And we've spent the last 18 months really focused on delivering phase 1. When we set out, we said we'd do a number of things by the first half of this year. That was identify our optimum development concept, so frac placement, well trajectories, facilities infrastructure, pipelines, offtake route. We've done all that. We submitted our concept select report to the UK government in May of this year, and we got it approved within 6 weeks. Now, that's quite remarkable. I have seen companies take over 12 months to get a concept select report approved, and I think that speaks volumes to the requirement for the UK regulator to start making approvals more efficient. We need to get these gas fields on stream as fast as possible. Nobody wants to take 12 months getting through an approvals process for a development concept. So we submitted that, got approval within 6 weeks. That development concept we also put in front of our reserves auditor. When we started with the license, Our phase one was 220 BCF of 2C contingent resources. Following evaluation from our auditor, where we could show them the entire development concept from the reservoir to a sales point, we now have 300 BCF of 2P reserves. Our reserves auditor came back and said, as far as they're concerned, that our phase one is justified for development and has a 100% chance of being developed. So this project is happening, and this project is real. What we also delivered was an offtake route. One of the things that the previous owner-operator did was removed a lot of the infrastructure in place, but we are surrounded by a lot of very usable infrastructure owned by other owner-operator groups. We have identified a single gas transportation and processing route that will take our gas down to the Bacton terminal, and so we are now in an engineering study agreement with Shell to define the engineering around a tie-in with the Shell infrastructure, and Shell will transport and process our gas for us down to a sales point in the UK. We will continue to own the molecules. We'll be a customer of Shell's. They will look after our molecules, and we'll pay them a tariff on top of our gas for that transportation. We've been working with Shell for about 12 months to achieve this, and that's something we were very pleased to announce quite recently. So everything we said we would do at the beginning of last year, we have done, and we've also seen a significant increase in the resource volumes as part of our phase one. What do we do next? I think one of the key things that we've just started to look at, and we started a process at the end of June, is start to, I guess, fill in the last part of the puzzle for our phase one. So we have a development plan, we have an offtake route, we know how to get our molecules to market. We need the development capital to do that. So we've launched a divestment process. We're looking to secure an industry partner to buy a significant stake in our phase one development, and that divestment should allow us to put in place the majority of our required development capital. And just to talk round numbers, we've got a company very close to us, Independent Oil and Gas, who are now in production, but in 2019 were in a very similar position to we are in today. They went through a partial divestment process. They sold 50% of a small gas development project to a company called Cal Energy, who are funded by Berkshire Hathaway, so Warren Buffett, and they achieved a sale multiple of roughly $3 per barrel of oil equivalent, and that was when gas was trading at about 40 pence per therm. We all saw the graph earlier. Gas, I think on Monday or yesterday, was about £5 a therm. We see long-term gas pricing at being 80 pence or £1 a therm, so a very different gas price environment to when IOG achieved $3 per barrel of oil equivalent. We believe we're targeting roughly $5 per barrel of oil equivalent, and what does that mean for a divestment on phase one? Our phase one is roughly 50 million barrels of oil equivalent. If we sell down 50% of that, that's 25 million barrels of oil equivalent. That's $125 million. That will get us to first gas on our phase one development. So the partial divestment process we have underway right now is very important in terms of putting the first tranche of our development capital in place. What it also means is we will have an industry view on the value of our asset. We currently trade around about on market an implied value of roughly $1 per BOE, and we're talking about industry looking at this and saying it's worth $5. So we see not only the transaction that we're looking to achieve as allowing us to put our development capital in place, but a significant re-rate of the valuation of the asset and the share price on market. We're looking to conclude that transaction towards the end of this year. Certainly, we're very busy on it at the moment. We have a good number of companies in the data room, and that's really our focus for the next 6 months. We're also focused on the next steps of engineering and environmental work. We've been out to the market looking at quotes for front-end engineering and design and for environmental surveys. That will lead us to submit our FD field development plan early next year and take final investment decision on our phase one middle of next year. That sees us putting platforms in place in the North Sea in summer of 2024 and first gas towards the end of 2024. It's a very near-term gas for the UK gas market, and I think because of that we've got a very, very active data room. I could talk all day about this. I'm conscious I've got about 2 minutes left. I'm not sure I'm going to say much more because I like to leave a bit of time for questions. But I think just what's worth pointing out is what our offtake route looks like. So this is a cartoon of our development plan. You can see 2 minimum facility wellhead platforms. They are ultra minimum facility, so we have very low power requirements on platform wind, on platform solar, and then that goes through the Shell network down to the Bacton reception facility. So you can see this is a very real, very low emissions, very low impact, very high value project that is happening now and delivering first gas in 2024. And I think I'll leave it there.